Ladies and gentlemen, I welcome you all to the H1FY25 post-earnings conference call of MCON Rasayan Limited. Today on the call from the management team, we have with us Mr. Mahesh Bhanushali, Chairman and Managing Director, and Mr. Nandan Pradhan, Full-Time Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business, performance highlights and developments for the half year that went by, and your growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Yeah, good morning all. So myself Nandan Pradhan, and the if first I will talk about the business of MCON Rasayan India Limited. So MCON Rasayan India Limited as a company, we are involved in the manufacturing and sales of construction chemicals, specialty building materials, which help the builders, developers, infra projects to make their projects better, to withstand the test of time, and also to refurbish the concrete structures. So we have got a range of products which encompasses 200 plus products, and they are distributed in 12 different categories, right from admixtures to watering systems, tile adhesives, tile grouts, concrete repair products, and so on. And we are mainly working in 4 different segments of selling. The first being the residential segment, that is the builders, developers, and the contractors who make residential and commercial buildings. The second is the infra segment, where the government infrastructure is there. So that involves roads, bridges, dams, flyovers, water treatment plants, reservoirs, and all those things. The third is the repair rehab segment, where it's about the concrete repairs and concrete rehabilitation. That is rehabilitation of the old concrete structures of government. Those can be the bridges, the rehabilitation of the bridges, the dams, the flyovers, or the buildings. That is the old buildings which are more than 10 years old. Those go into major repairs, and also the waterproofing of those buildings where they are either leakage prone or subject to various wear and tear due to the various effect of the environment. And the last but not the least is the retail segment, wherein basically we are selling to the homeowners through the shopkeepers. So all the cement building material shops, the paint shops, the hardware shops, the tile shops, those people are also keeping our product and selling it to the end user. So this is overall the business, and due to certain technical error, we had prepared the presentation, but unfortunately could not be uploaded on the NSE. So we will have more of a verbal discussion. Will not be able to show you anything, but yes, the last 2 quarters have been fairly good from the company's perspective. Yes, it was a challenging environment because the rains were very extended this time, and rains has got a direct effect on our business because all the external work which encompasses waterproofing and repairs and new construction, concreting, all gets slowed down during the rains. And just prior to the rains, there was election in India. So that also impacted the government projects in a big way. But still, in spite of all these challenges, your company did really well in terms of that we could, if I say half year on half year, we increased the sales revenue by 25%, and the PAT also has got a bit better. If I talk of utilization of our manufacturing plants, then our Sarigam plant was utilized at around 87%, while the new plant at Ambeti near Vapi, that was utilized around 67%. So again, if I talk of ratios in terms of the products, then like in our previous meetings, we have already said that we are trying to change the product mix. We are more of a dry mix powder oriented company. We are shifting towards the liquids, the admixtures, and the shift was very evident in this year's product mix. Like currently, maybe around 45% of our product are of the low margin things, and the 55% have gone into the high margin belt, right from tile adhesive in the powder segment your concrete repair, waterproofing systems, admixtures, and the protective coatings. So that way, the entire product mix has changed a bit. Again, we ventured into two new states in this year. One is in UP, and the second one is Karnataka. And there also our products have found a good acceptance. In these two states, we have appointed almost 10 new distributors who are selling our product, and also we have got repeat orders from the distributors. That itself shows the benchmark that yes, we are being accepted. Now to cope up with all this kind of growth, of course, our new plant is good enough and has got fantastic manufacturing capability and capacity. But at the same time, the geographical distances of various locations are also to be kept into picture. So we entered into the outsourcing model, wherein we have tied up with various people, and almost 5 manufacturing plants currently are already operational. Another 3 are expected in next 2 to 3 months to become operational. So we have already got plant in Indore, we have got plant in Pune, uh, we have got plant in Ghaziabad, and one more plant we are coming up in Bangalore. One already we have started in Bhiwandi, one we have started in New Bombay. So these are the plants which ensure that the transportation cost, which was very high, can be offsetted, which will have a slight improvement in the margins. At the same time, uh, it also increase our manufacturing capacity due to all these plants coming in. So, and the recent development is that we also been approved by Maharashtra Housing Development Corporation, which is one of the very premium institute, and very few people know about this. So this particular government organization takes care of all the Prime Minister Awas Yojana happening in Maharashtra. So that was a big achievement for us. And just to ensure that the major chunk of Prime Minister Awas Yojana is happening on the Vidarbha belt and the Solapur belt. So that's why we did one major tie-up with manufacturing plant in Solapur. So it's a FOCO model where they are operating based on our plant ideas, our manufacturing ideas, our formulations, and our quality control parameters. And our team is also sitting in that plant to supervise the entire thing. And from there, we will be supplying to the entire Prime Minister Awas Yojana projects in the entire belt from Pune upwards up to Nagpur. So yes, that's about the business in nutshell. Uh, yes, Vinay sir, that's what we have currently.
Sure, sure. Thank you, sir. All those who wish to ask a question may use the option of raise hand. In case there's a problem in raising hand, you can just drop us a message on chat and we'll invite you to ask the question. Right? So until the question queue assembles, it'll be helpful if you could brief us about the recent fundraise that you've done and the co-manufacturing setup that you're building and the thought process behind that.
Okay, right. So the recent fundraise we did, it was almost 16 crores of fundraise that we have done. And major reason for doing the fundraise is the requirement of working capital, because the speed at which we are growing and the speed at which we want to grow in the next 2 quarters and the subsequent financial year. So for that, working capital will be one of the important parameters. Uh, the three major reasons for working capital, number one is of course increase in turnover. So increase in turnover and the cycle at which the payment comes in from the distributors, especially when you go into new geographies. So to offset that thing, we need additional working capital. Second is all this outsourcing model. There, the payment cycle is shorter compared to what we used to have with our supply vendors. So again, there, and it's a finished good. So again, the working capital need increases. And number three, which is the increase in product range. Like we ventured into paint, we ventured into admixture. So all this will require new type of raw material, new type of packings like drums and buckets and printed buckets of multiple sizes and multiple variants. So there also working capital is involved. So due to three major reasons, we had to infuse these funds into the company. And this venture that Vinay sir is talking about, it's again the Solapur thing that we are talking, where we did kind of FOCO model with the franchisee. So here the company has taken our franchisee and they will be manufacturing MCON range of product in their entire manufacturing plant. They've got a beautiful manufacturing plant already established in Solapur, and the papers have also been signed and everything. Now my QC team is working over there to set up their laboratory, so that once that is done, then we can start full-fledged manufacturing from that plant and can start supplying. Currently, we are already supplying to the Prime Minister Awas Yojana projects, but that is happening through our Vapi plant, which is already up and running. So yes, that's it.
Thank you, Nandan sir. We'll take the first question from the chat box. So the first question is from Guneet Singh. He's asking, what is the outlook for FY25 in terms of top line and bottom line, and what kind of growth can we expect in FY26?
Okay. Yeah, so Puneji, in the beginning of the year itself, we had planned of around 80 crores, and currently also we are working on the same projections of around 80 crores for the FY25. In the first half, we are short by around 20-25% of what we had projected, but that we are sure we can cover up. Again, the challenges I already told in my introduction, the rains and the election were the major challenges, but now the rains are almost over, and the Maharashtra election is happening in few days. After that, I don't think any election season happening anywhere. So yes, the ground is ready, our team is ready, the products are ready, and the market is ready for us. So we are sure we can achieve that. Again, FY26, again, we are expecting a robust growth, because see, what is happening is that, honestly speaking, we are currently slow compared to the market. Like the market, like every product segment that we are operating in, the market is more than 3,000 crores. So we are not even at 1% or 0.5% of the market. So that's why whatever projections we are doing is already good enough, or we have got enough market for that. So that's not a problem at all. We can ensure that even next year we do almost 80 to 100% growth where we end this financial year.
His second question is, what is the maximum revenue potential from the current capacity, and what is the current capacity utilization level?
Okay, the current capacity utilization level of single shift is somewhere between 70 to 80%. But yes, we can operate in 2 or at least 2.5 shifts. So double is very easy for us. Number 2, the utilization vis-a-vis the turnover is again dependent on the product mix. Because in the same capacity, I can manufacture a product which is 5 rupees a kg. I can manufacture a product which is 25 rupees a kg. So the turnover can just grow by 500% just when I change the product mix. So to evaluate the exact value of what can be manufactured in this plant capacity, it can be anything to the tune of 400 to 500 crores. So that's not a problem. Plus the additional capacities that we have added. So again, that itself again 200 to 300 crores. So manufacturing capacity will not be, I can say, an obstacle for us in further going in the markets. So it's all about how fast we spread and how fast we get the orders so that we can supply the product.
Right. Thank you, sir. We have one more question from the chat box from the line of Raghavendra.
Yeah, I
His
will
question.
just update Vinay sir's message, like maybe if you have read or not read, that now the PPT that I was talking of has been already uploaded. So if anyone wants to refer that, then they surely can refer that. Yeah, continue.
Thank you, sir. So his question is, what will be the margin for FOCO model and toll model?
Margin, as far as the company is concerned, well, the margin, the hit of margin will not be much, because it will be offsetted by the transportation cost that we used to incur. For example, I will just give a small example like Solapur, like the FOCO model that we have started in Solapur. So transportation cost for me sending the product from Vapi to Solapur was anything between 2 rupees 75 paise to 3 rupees 80 paise, depending on the size of the vehicle and the quantity that has been ordered. So vis-a-vis that, which roughly converts to 5 to 6%. And vis-a-vis that, the saving that I will be making through the FOCO model will offset the margin that I will be giving to the franchisee. So the margin differential between what I sell from WAPI and what I sell from the outsourcing partner will be maybe somewhere around 1 to 1.5% max.
Also extending to this, because the products what we are manufacturing VAPI are more over of powder products, which are also an economical products. And when we talk of FOCO model, so there we are focusing on specialized products only. Majorly what we will be supplying will be the products which will be slightly on higher margin than what we manufacture in VAPI. So that is the reason it will be not a big impact because of this FOCO model. So our pack may increase slightly.
Thank you, sir. We'll take the next question from the line of Meet. Meet, you can go ahead, please.
Hello, sir. I have two questions with me.
Sure.
In the past, you have indicated for 50% growth for revenues. However, H1 doesn't mirror the vision. Could you please guide how will you achieve that in second half and in future years?
Right. Yeah. So Mirji, yes, we are short by just like I told you that by 25% overall what we are targeted. Like we are targeted around 30 CR, we are around 21.5 CR. So yeah, 75% we achieved. So we are short by that, but that itself can be offsetted very easily. And still, if I talk of target of 50% growth, we will be going far above that for sure. So that's not a problem at all, because the ratios, if you see H1 versus H2, then it is normally 35 to 65% ratio. So 65% of our turnover normally comes from the H2, because H2 is the main season for construction chemical and other products. And plus this year we are added, not I cannot say added, but yes, we are increased the portfolio of admixtures. So that is going to have a big impact on our total turnover.
Okay, sir. And my next question, how are you competing with large players like Pidilite and Asian Paints in this sector? Because they are also present in this infrastructure segment.
Yes. Yes, Mirji. So see, large players are present, but again, the modus operandi of theirs and ours is slightly different. We are more focusing on service. We are more focusing on relationship. And in our case, directors are directly connected with the field. When I say directly connected with the field, for example, I am personally connected with quite a few RMC manufacturers. I am personally connected with my distributors, which doesn't happen with Asian Paints director or Pidilite director. So that personal connection helps us a lot in converting the distributor from a big brand to a small brand like ours. And after being listed, we are also considered as one of the brands. Maybe of course not big, like we don't have those deep pockets. So yes, the marketing campaigns are not that big or not that huge, but the personalized campaigns are far better of ours.
Okay, sir. Got it. Thank you.
Thank you.
Thank you, Meet. We'll take the next question from the chat from the line of Naresh. So his first question is, in terms of quality and price, how is our product placed when compared to Fosroc?
Okay, so quality wise, yes, we are comparable to Fosroc, and I have got high regards and high respect for Fosroc quality and Fosroc product, because they have got fantastic consistency in terms of quality. So I appreciate, and we also target the quality of Fosroc every time. We benchmark ourselves with quality of Fosroc, not with Pidilite, not with Asian, to be very honest with you. So yes, pricing wise, we are almost 20% below Fosroc.
Okay. His follow-up question is, what is the revenue share coming from the government sector from now?
20% currently vis-a-vis the total.
And in the new states wherein we are entering, how are we planning to get civil contractors on board as customer who is presently having business with other construction chemical company?
Yeah, so the key, basically, it's a copy-paste model for us. Like the way we succeeded in Mumbai, the way we succeeded in Rajasthan, Jaipur, the way we succeeded in Indore in MP, the same way we are planning to do Karnataka, the same way we are doing UP, where there are three major fundamentals that we adopt to. Number one, having the best people on board who are, you can say, conversant with the market and well trained on the products. So that technical selling has to be there. It cannot be the me too selling, and my product cannot be a me too product. Number two, having good distributors on board who are pro MCON. We are not looking for investors in a distributor. We are looking for good salesmen in a distributor who is ready to promote MCON brand, because that local connection makes a lot of difference for us. Like the person who is sitting in Mysore telling that boss MCON लेके जाओ मैं बैठा हूँ, makes lot of special connection with the civil contractor rather than MCON person telling it. So that is the second thing. And third, we have got that various promotional things for the contractors, like token system is there and the schemes are there. So all those things attract the contractors towards MCON.
Thank you, sir. We'll take the next question from Sumit Chopra in the chat. His question is, if we can explain the strategy behind outsourcing manufacturing, when we have sufficient unutilized greenfield capacity available.
Yeah. Okay, Sumitji. So see what happens is, for example, I have started outsourcing manufacturing in Faridabad. Okay. And I am manufacturing tile adhesive over there. Now, tile adhesive is 10 rupees a kg product, selling price. Okay. Now, 10 rupees a kg product and 3 rupees 50 paise is the transport cost from Vapi to Delhi. Now, if I have to sell one bag of tile adhesive in Delhi, okay, my transport cost, is, which is a 20 kg bag, then my transport cost is 70 rupees a bag. And a product which is 200 rupees a bag, out of that, if 70 rupees a bag is a transport cost, then no one is going to afford it. Now, to create that kind of affordability and to ensure that this transport cost can be offsetted, we need that manufacturing base in Delhi if you want to sell in Delhi. So that's the reason when you spread geographically, you need those outsourcing partner with you so that you can spread in a wise manner and also ensure that the profitability of your distributors is intact.
And also in terms of, if you talk of Vapi plant, the capacity of Vapi, our Ambedi plant and Sarigam plant. So we have a west zone to cover from that plant, and the manufacturing capacity will be utilized in west zone of India. So that's our showcase factory. Whenever there is an approval process, like any government department visiting, or you have any big developers, big contractors visiting our factory. So we will make them visit our factory and we show the process how we manufacture, which is a miniature. Other FOCO model or outsource model is a miniature of this factory. So that's what we try to prove, that our quality is intact. You buy even my product from Vapi, you buy a product from Rajasthan. So that's how this model will work.
Right. His follow-up question is, how much would be the opportunity size for MHDC housing projects?
How much would be? Sorry?
The opportunity size.
Opportunity size. See, normally, if I talk in general, then in a construction project, the total value of project, around 1% is the consumption of the overall construction chemical, which is a mix of admixtures, tile adhesives, wall putty, paint, textures, and other ancillary products like bonding agents, A, B, C, D, everything. Okay. So if I take that ballpark figure over here, then the opportunity size is somewhere to the tune of 800 crores of the Prime Minister Awas Yojana or the MHDC.
Right. So there's one more question from Rajesh Swaminathan in the chat. Can we quantify in terms of top line and margins the impact of Awas Yojana for us?
Top line and margin. Well, in the current financial year, we are expecting the top line to get around 15% from the Awas Yojana, the overall top line. So that is the impact. And margin, well, the margin may not be that big impact, because again, when the volumes are there, the rates are very competitive, because there are other people also who are going to fight. It's not that we are the only one approved brand. There are other 2-3 brands to compete with. So yes, the margins will yes, they will be better because again, limited competition. Not everyone is getting that specialized letter, but still the margins, that impact will not be that big. Yes, top line, it will be a big impact.
The next question is from the line of Nishant Gupta. His question is, could you please share financial guidance of revenues for the next 3 years and target EBITDA as well as PAT margins?
Well, it's more of a forward-looking statement, but yes, 100% growth year on year is something that we are surely targeting for. And we are also prepared for that kind of growth in terms of team size, product range, and everything. And EBITDA, it will surely improve, maybe not in double-digit percent year on year, but yes, single-digit percent EBITDA will surely improve. So EBITDA improvement will be seen in years to come back.
We'll take the next question from the line of Ashish Singhal. His question is, how has been the sales in the month of October? Does it give confidence that we will be able to achieve the sales turnover of about 60 crore in H2, which management is now targeting?
Yeah, October has been a good month. Not the best month, I would say. Like I would have expected it to be better, but unfortunately, the rains continued in the October month also. But still, it has been a very good month in terms of sales figures, and we are sure that that will help. Like you can, say that the vehicle has taken the speed and it's ready to launch itself. So that launch is ready, and in the next 5 months, we will surely overcome the deficit that we have faced in the first half of the year and try to achieve somewhere between 80 crores.
Thank you. The next question is from the line of Vatsal. His question is, what is the long-term stable state margins for the company? EBITDA.
Like I told you, like it will be anything between 16 to 20%. That's what we are focusing on.
There's a follow-up question from Naresh. His question is, how many vendors have been shortlisted for MHDC project for supplying construction chemicals?
As far as I know, as of now, 4.
Anyone else wishes to ask a question, please raise your hand or put it on the chat box.
So there have been a few questions in the chat box regarding the QIP participants and whom all it has been allotted to, if you would like to share,
I think it has been uploaded on the NSE because I don't remember it often like this, like who have been allotted. Yes, one or two names that I can remember. HDFC is one of them, which has been given, and
Antara is there, Tattvam is there, Swayom is there. List is already been uploaded, Vinay sir.
Sure. Because one of the participants messaged that they're not able to see the list on the exchange. That's why.
okay.
Okay, we'll check it, and if not uploaded, surely we have to, because allotments has to be done.
Sure, sir.
There's
We'll
a
take the
question.
next question from Priyam. Priyam, you can go ahead.
Yeah, am I audible?
Yeah, you are. Tell me.
So just wanted to understand, did I hear it correctly when you say that 50% of current year revenues will be coming from PM Awas Yojana, like 40 crores out of 80 crores will be coming from that scheme only?
No.
No,
Yeah,
so
yeah.
like,
No, I said 10 to 15%.
okay, yeah, 10 to 15%. And going forward, when we are looking at 100% year-on-year growth, so assuming we achieve 80 crore this year, assuming we achieve 150 crore next year, what kind of margins can we assume, say, for FY26 and 27? I get your point that over long term, 16 to 20% margins can be sustainable in this company. But assuming we'll be entering new geographies also, and probably wherein we'll be competing with larger players. So for the next 2, 3 years, do you think that the margins will remain range bound at around 12, 13%, or that 16 to 20 will start coming in?
No, I'm sure that the margins will be what they are or will be better. The only reason is we are consciously working on the product mix. and we are selling certain products which are high margin product vis-a-vis what we were selling earlier. So the ratios are changing. Like ready mix mortar, earlier we were selling 42%. This half year we have done 37%. So 5% we have reduced that, and 5% we have increased in admixtures, which is again a slightly high margin product. So that way we are changing the product mix consciously to ensure that the margins remain intact or become better.
Yes, and
Okay. And
Priyam, the competition is definitely there. But as we have got a very good product mix and a good product portfolio, so which is what is helping us to compete them.
okay. And after the recent fundraise, at what scale of revenue do you believe, considering the working capital requirement in this business, that we won't require any further fundraise? Is it at around 300 crore, 400 crore? What level do you envisage in your business plan?
Mm, See, basically, Priyam, what happens is that the fundraise vis-a-vis the turnover, it's depend on two things. Okay, one is the speed at which we grow. Okay, if we grow at the speed like what we are targeting as of now, 80 to 100% year on year, then maybe around 200 to 50 crores we can sustain with this fundraise. But if we increase the speed, because the way the government projects are coming in and the way we are also targeting, you never know. And if we
No,
increase
that's
the
why I
speed,
didn't ask number of years. I just asked like revenue. So 200 to 50 crore revenue can be achieved with the current
correct,
balance sheet strength,
correct,
is
correct,
what you're
correct.
telling.
Yes.
Okay, okay, okay. Okay, sir. That's all from my side. Congratulations and going all the best going forward.
Thank you, Priyam. Thank you so much.
Thank you, Priya. If any other participants have any questions, please raise your hand.
Since there are no further questions, shall we end the call, sir?
Yes, Vinay, if there are no questions, then we can end it. And
Okay. Would you like to give any closing comments,
yeah,
Mahesh ji?
yeah, thank you all the participants, all the stakeholders, and all the investors who have been trusted us. And we would request everyone to keep on trusting us. Your company, as we always commit, we are on the verge of growth, and we are not going to stop there. So thank you everyone for trusting us.
Thank you so much, sir. And thank you to all the participants for joining on this call. This brings us to the end of today's conference call. You may all disconnect. Thank you.
Thank you.
Thank you.